A warm welcome to all students to Mickey's classes. And today we are going to discuss about a very fundamental topic in accounting, which is called as the accounting equation. So this is the fundamental equation which one needs to understand in accountancy so that one is clear with all one's concepts. So this is very closely associated with the double entry bookkeeping system. Okay, as we go along, you'll understand what I'm talking about. This whole concept of duality, which is the fact that at least two accounts will be involved in every transaction which you make an entry for. And that is one of the most basic and fundamental concepts in accounting. Let's start off. So the agenda for the day, as I told you, is understanding the concept of this accounting equation. What is this accounting equation? It says assets is equal to liabilities plus capital. Okay, we'll try and understand what this might mean. But because we have earlier covered one or two other videos which already discusses about what are assets, what are liabilities, what is capital, we can just quickly try to figure out what this statement might be all about. Just saying assets is equals to liabilities plus capital. You think about it. Liabilities are basically what? Money which you've taken for your business, right? From outsiders. The most typical example of a liability will be a loan, isn't it? So liabilities as well as capital, if you think about it, both of these are basically sources of funds. These are all sources of funds, right? So both of this provides money to the business. Money flows into the business, right? Capital is what the owners give. Owners put into the business. Liability is what outsiders put into the business, isn't it? So both of these are sources of funds. Both of these are sources of funds, correct? And if you think about it, assets are what? Assets are things which you require to run your business, such as machinery, such as a factory, such as a building, such as land. All of these are examples of assets. This is not an exhaustive list, but these are the example of assets, right? So what do? For assets, you'll have to use the funds. You use the funds. You get the funds from outsiders, in terms of loan, etc. You get funds from the owners, and these funds, what do? You use them to do what? To run your business. By doing what? By buying assets. You might have to buy a building, you might have to pay some rent, you might have to buy some land. So you think about it. So liabilities and capital provide you the source of funds. And assets, basically, you use the funds for. So these two have to be equal at any point in time, which does not mean, please do not get confused, which does not mean that you'll not make profits. Because as we go along, you'll find out that profits is already inside this equation. Profits is a part of this. Because profits, I'll just quickly tell you, is a part of this part of the equation, capital. This is owner's capital, which the owner puts in, and also profits, which the owner makes. Okay, so these two sides must always be equal. Okay, let's move on now. This we've already discussed. Assets is equal to liabilities plus capital. And to get to this equation, the second point, what it is trying to tell you is, to get to this equation, you'll have to know about the balance sheet as well as the profit and loss statement, which are topics which will be covered in later chapters in your curriculum. But still, because assets and liabilities basically will be in the balance sheet, and the profit and loss statement will show you how much of profit or loss has the business made for the year. And that will again feed into this capital, because owner's capital might consist of, just to give you a bit of an intuition, would consist of funds which the owner puts in, Suppose the owner puts in 10 crores into his business. Yeah, that is one. It will also have what you call as retained profits. Retained profits. What's the meaning of retained profits? Retained profit means profits which the business has made over the last few years, which it has not given out, which is still there in the business. Profits which are made by the business, which the business has not paid out and kept. So retained means what? Keeping. So it is retain the profits. Why has it retained the profits? If you're running a company and you make profits, either you'll take it out, use it for your own personal use, or keep it in the business so that you can grow your business further, right? So retained profits is also a part of this capital. And then the third component will be profits or losses for the year. So this profits and losses for the year, you'll be able to make out from this profit and loss statement, what is called as the P&L account, profit and loss account. Okay. And earlier P&L accounts would have told you how much is the retained profits. When a business makes profit, just to quickly touch upon the point, it either pays out to whom? To the owners, right? This is called as dividend. Or it can retain, which means keep. Retain the money. This is called as retained profits. Fine. So this capital basically consists of all of these components. There are other components too, which is again an advanced topic, which is not, I not have to discuss it here. Okay, now balance sheet and profit and loss statement, you'll have to know to understand this accounting equation. Then assets is equals to liabilities plus, we saw capital. Capital can also be written as revenue plus the gains, the revenue which you make for the year by doing sales, and whatever profits you make from other sources apart from selling your core products. And then you have to deduct the expenses and the losses. So this is basically the profit and loss account. On one side, you'll have all the expenses and losses. So just to give you a hint, expenses and losses will be on this side. And on this side, you'll have revenue and all the gains. So the moment you have this, this will give you the profit for the year. How much will be the profit for the year? And this profit which you make ultimately feeds into the capital. That is why this part can also be written as capital. Assets is equal to liabilities plus capital. Okay. Fine. So let's move on. So this capital, as I told you, can be broken down into this entire thing. Yeah. Now, double entry bookkeeping. So the accounting equation is very closely associated with the double entry bookkeeping system. It says every transaction has a dual, which means two, or twofold effect, right? So which means for any transaction which you'll record in your accounting books will have two sides to it. So there will be a minimum of two accounts which will get affected. Minimum of two accounts will get affected. Okay. It can be more. This is saying minimum, not maximum. So minimum of two accounts has to be there. There can be more, which means, but the minimum of two has to be there. One account will be debited, the other one will be credited. And also the amount of debit has to be equal to the amount of credit for every transaction. For every single accounting transaction, the amount of debit has to be equal to the amount of credit. Yeah. In terms of money. Fine. This is in terms of the amount. Say 10 lakhs here, then 10 lakhs on the other side too. Okay. So at least two accounts will be at least. So like we say minimum. Okay. When recording transactions, the total debit must be equal to the total credit. As we keep on practicing, as we keep on doing more and more examples, these concepts will become much more clearer to you, right? The duality principle is commonly expressed in terms of the fundamental accounting equation. So it is saying that this concept, this debit credit, and this concept of minimum two accounts getting affected is the same with this accounting equation. So in any transaction, this accounting equation can be checked, and this accounting equation will always balance out. We'll discuss about that in a while. And this is just to tell you that all of this is what will be used when we are trying to check the accounting equation. So for every account, you'll have to know whether it's an asset or a liability or a capital or an expense or loss or a revenue or a gain, so that you're able to categorize it. And the second part, you'll have to know the rules, which is already discussed in another video, what needs to be done. If asset increases, it has to be debited. If asset decreases, it has to be credited, and so on and so forth. All of these rules are also important. Okay, now let's start off. What we'll do is we're going to discuss this example, which is in page number 52 of your textbook. So let us get into a little more details about this accounting equation, which is what basically, as we've seen, it says assets is equal to liability plus capital. Correct? Assets is equal to liability plus capital. And we know the liability and capital is what can be thought as a source of funds for the business, from where the funds go into the business, and assets is where the funds get used. Correct? You use the funds here. Okay. Now, this equation for every single transaction has to balance. And this is the very foundation. This is the bedrock upon which this whole system of double entry bookkeeping is built up. Okay, let's see how. So if in a transaction, the amount of assets go up, but this equation has to balance. So left hand side has to be equal to the right hand side, right? So the left hand side, which is assets, has to be equal to the right hand side, liability plus capital. So if the assets go up, either the liability has to go up. Okay, if the liability doesn't go up, the capital has to go up. Correct? Because the equation has to balance. Assets is equal to liability plus capital. If asset moves up, either liability has to go up. If liability doesn't go up, then capital has to go up. If capital doesn't go up, then what might happen is one asset has gone up, the other has to come down by the same amount. But in any case, this has to balance. The left hand side, which is the assets, has to be equal to the right hand side. Okay? We'll understand this better as we keep moving along, as we keep on discussing examples. So, okay, let's check one by one. Like we discussed, the first step will be, like in the case of journalizing, you'll have to know which are the accounts which are involved. Then you'll categorize those accounts, whether assets, liabilities, gains or revenue, losses or expenses or capital. Then you'll put in the equation and check. Okay, let's start with the example now. So this is the example. The first point, the first transaction is introduce rupees 8 lakh as cash and 50,000 by stock. Introduce, so which means the business has been started by someone. And you always have to look at all transactions from the business's point of view. Remember that. You'll not look at it from the owner's perspective, you'll look at it from the business's perspective. even though owner is a separate entity from the business. Okay. So introduce 8 lakhs as cash and 50,000 by stock. The stock doesn't mean stock markets. The stock means goods or inventory. So suppose you're into the business of selling cars, the stock would mean stock of cars. Suppose you're into the business of selling televisions, this is stock of TVs. Okay. So what it means is the owner has put in 8 lakhs into the business and he has also given some inventory, some stock. Okay. So what will be the journal entry? So as we know, the moment cash is there, one account which will be involved will be cash. Okay. And it's also talking about inventory, stock. So that will also be a part of the transaction, which means, so what all will be there? Let's check. Okay. The journal entry for this first transaction. So cash has come into the business, right? The owner has put the cash into the business. So which means the cash account has to be debited. The other thing which has happened is the owner has also put in some stock, some goods. Correct? So that also has to be debited. So whatever the stock might be also has to be debited. Okay? And all of this, and the business owes this money now, this 8 lakhs in cash and this 50,000 in stock to the owner. So when the owner puts in money, it is basically, if you remember the accounting rules, you'll remember that capital, when it comes into the business, it has to be credited. So this account has to be credited. And as you know, when an account is created, we not have to write CR. We just write to capital. Okay, and the amounts you know. This will be 8 lakhs. This will be 50,000. And so this will be the combination of both of these. So 8 lakhs, 50,000. This will be the journal entry, right, for the transaction. This will be the journal entry for the transaction. So now let us check in terms of the accounting equation. Okay. So let us check the accounting equation now. Assets is equal to liability plus, I'm using shorthand, plus capital, correct? This is the accounting equation. Now in this case, so what has happened? Cash. What is cash? Cash is an asset, correct? I'm writing A. How about inventory and stock? That is also an asset, as we have discussed earlier, right? This is also an asset. How about capital? Capital is just capital, right? Correct. So now what will happen? Think about it. So on the left hand side of the equation, what has happened? Assets in terms of cash has gone up by 8 lakhs. So asset in terms of cash has gone up by 8 lakhs, right? 8 lakhs has come in the business, plus also in terms of stock, how much has come in? 50,000. So the left side of the equation, assets, goes up by how much? 8,50,000. And the capital, which is here, capital, also goes up by 8,50,000. So we see that both sides of the equation balance out, right? Assets have gone up by 8,50,000 because cash, 8 lakhs of cash has come in the business, plus stock, 50,000 has come. And the capital also, 8,50,000 has gone up. So the left hand side of the equation is equal to the right hand side. Okay. Now let's move on. Purchase plant, which is used in a factory maybe, for 3 lakh by paying 15,000 in cash, which means what happens to the rest? Rest shall be paid later. So what will be the journal entry for this? You think about it. So what has happened is purchase plant, right? So plant account will be debited, correct? This has to be debited. And what has happened is to cash, because cash has gone out from the business, right? Cash is an asset, it has gone out from the business, so it will be to cash. And to The other thing which has happened is the liability. The liability also has gone up, isn't it? Purchase plan for 3 lakhs by paying 15,000. The rest has to be paid later. So which means there is, to the person from which this plant has been purchased, a payment has to be made. So this will be to creditor, whoever is a creditor, because the name is not given in this transaction. Okay, these two accounts will be credited. So purchase plant, how much? This is for 3 lakhs. 15,000 has been paid in cash. What is the amount which is outstanding to be paid? 2,85,000. Correct? 2,85,000 has to be paid later on. Plant is an asset, cash is an asset, and this payment to be made to the creditor is a liability. Let's see how it works on the accounting equation. Assets is equal to liability plus capital. Fine. So the asset, the plant has gone up by the plant which has come into the business. What is the value for that? Is 3 lakhs. Correct? And then there's another asset which has gone out, which is what? Cash. Cash has gone out. So minus how much? 15,000. So the left hand side of the equation, 3 lakhs has come in, 15,000 has gone out. This will be 2,85,000. Let's check the right hand side. The liability has gone up by 2,85,000. This liability is there, right? So the left hand side has gone up by 2,85,000. The right hand side also has gone up by 2,85,000. So again, the accounting equation balances as it must. So which is the next transaction? Business's money has been deposited into the bank. What is the journal entry for that? So when you deposit money into the bank, what must have happened? You deposit cash. So cash from the business's point of view has gone out, right? So your bank account, there is more money in it. Bank account is an asset, right? So that has got debited because an asset has increased. You debit assets when they increase, right? And another asset, which is cash, has decreased because you have put in the money into the bank. It has gone out from the business into the bank, but it has gone into your own bank account, correct? But the cash has gone out, whatever, right? Now, how much the bank balance has gone up by 6 lakhs and your cash balance for the business has gone down by 6 lakhs. And both of these are assets. So think about the fundamental accounting equation again. Assets is equal to liability plus capital. So this asset, bank, has gone up by 6 lakhs. So both, we have to check only the asset side this time. The bank balance has gone up by 6 lakhs and the cash balance has gone down by 6 lakhs. So this left hand side, plus minus, there's a movement of 0 and nothing happens to liabilities and capital. So again, this account is, this equation balances. Correct? Okay, let's move on. So purchase office furniture for rupees 1 lakh and made payment by check. Whenever there's a payment made by check, which means the bank account for the business is involved, right? And the other one is office furniture. Furniture is an asset. So what will happen? Furniture account has to be debited. It is an asset and it has increased. So it is debited. And 2, the payment is made from the bank account. So the balance in the bank account decreases. Both of these are assets. So furniture has increased and the bank balance has decreased. Both of them are assets. So one is debited, one is credited. By how much? By 1 lakh. Fine. The fundamental accounting equation, again, if we write down here, is assets is equal to liability plus capital. Fine. And again, in this, only the asset side is affected. Only this left-hand side, only the asset side is affected because both the accounts which are involved are on the asset side. Furniture, has increased by 1 lakh, correct? And bank, which is again an asset, bank balance, which means bank account balance, has decreased by the same amount. So both belong to this side, and the plus and the minuses are the same, 1 lakh, 1 lakh. So this again balances. Fine. Okay, let's move on. What is the next example given? Purchase goods worth 80,000 for cash and 35,000 in credit. So what is the total amount of purchases here? And when you say purchase goods, earlier you had said purchase office furniture. This is an asset, correct? Then you had said purchase plant. This is also an asset. But here you're purchasing whatever business you are into. You're buying your own stock. You're buying your inventory. Suppose you're into the business of selling anything at all. Take an example of you're selling some toys. Okay. So in this case, you bought your stock or inventory. Suppose you're into the business of buying and selling toys. So you bought toys for this much. Okay. So what will be the journal entry now? So how much have you bought? 80,000 in cash and 35,000 in credit. So total amount of toys bought will be 1,15,000. Correct? 80,000 plus this 80,000 plus 35,000. Correct? So how much have you purchased? So this will be called as a purchases account when you're buying stock or inventory, right? Will be 80,000 plus 35,000. 1,15,000. To cash. How much of cash payment? 80,000. And the rest has to be paid to the creditor. So how much has to be paid to the creditor later on? 35,000. Whoever is your supplier. Yeah. So this will be the accounting entry. So this is a little different from the others because the accounting entry is this. But when you're trying to think about the accounting equation now, assets is equals to liabilities plus capital. Here the asset is very clearly this cash is an asset and this creditor is a liability. This is an asset, this is a liability. How about this purchase account? If you have checked another video, we have discussed about the fact that purchases when you're buying stock is basically an expense. This is an expense. Now the equation is assets is equals to liability plus capital. Where does this fit into? This expenses, where does this fit into? If you remember, we had discussed that this part, capital, basically consists of the revenues on one side. So what will be there in this? Either business gets some revenue or gain, or make some expenses or losses. Correct? So this expenses is a part of this. This expenses will come into this category. So let us check how to check this accounting equation this time around. Okay. Assets. Cash has gone out because the business has made a payment of 80,000. So cash will be, so cash is minus 80,000. Correct? Cash is minus 80,000. And this liability, which is on the other side. What has happened here? This liability, what has happened here? The payment to be made to the creditor is 35,000. 35,000 is the payment which has to be made to the creditor. So the liability has gone up, correct? 35,000. Is this balancing? On the left hand side is minus 80,000, right hand side plus 35,000. No. Let's check what has happened to the capital now. Let us check what has happened to the capital account. So the capital account, There's an expense. So within this capital account, as I told you, it can be broken down into revenue or gain and expenses or losses. Correct? Capital account is equal to revenue or plus gain minus expenses minus any losses. In this case, this is an expense, correct? So what has happened? There's nothing on the revenue, there's nothing on gain, there's nothing on losses. For this particular equation, it is only expenses. How much of expenses? This 1,15,000 is the expenditure. So inside the capital account, there's a minus sign here. See, there's a minus sign. So this has to be minus 1,15,000. So C will be, for this particular equation, C will be, extremely sorry, this is a very crowded slide. I know this is minus 1,15,000. Correct. So on the left hand side is minus 80,000. On the right hand side is plus 35,000 minus 1,15,000. So let us check. What is the right hand side equal to? Right hand side is this plus 35,000 and minus 1,15,000. If we add these two, this will come to minus 80,000. So again, and this side was also minus 80,000. So this side again is equal to, left hand side is again equal to the right hand side. Okay, sorry for the crowded slide. Let us go quickly to the next example. What is this? Goods amounting to 45,000 was sold for 60,000 on cash basis. So this is sold for cash. So one of the accounts must be cash. So what has happened? Goods amounting to 45,000 was sold. Okay. And this is was sold for 60,000, not for 45,000, was sold for 60,000. So how much of cash do we get? 60,000. So when 60,000 of cash comes in, the cash account has to be debited by this 60,000, correct? 2, which is the other account which is involved? We have sold. So the other account which will be involved will be the sales account. Sales account, right? Has to be credited by how much? 60,000 again. Okay, why not 45,000? And this is something which we have discussed earlier, but I'll also make a separate video for you to understand. When you're buying stock or inventory and selling it for a profit, why don't we put that profit into this particular journal entry? That is a discussion, that is a separate discussion. Yeah, I'll make a video for that. Please don't worry. I'll clarify this point separately. But the journal will be cash, 2 sales, 60,000 and 60,000 here. Okay, so what will happen? So think about the accounting equation now. And this is an asset and sales is basically a revenue. If you remember the categorization, it can be an asset, liability, capital, expenses or losses, or revenue. So in this case, it is a revenue, the categorization, correct? Sales is a revenue. So what happens? Cash, which is an asset, has come in. Okay, so asset plus, and the revenue also, because sales has happened, revenue is also plus. Now, how should we look at the accounting equation? Assets is equals to liability plus capital, correct? Okay, here. Now, in terms of cash, the left-hand side of the equation has gone up by plus 60,000, correct? The asset side. How about this revenue? So again, like we discussed in the last example, within this capital, we have expenses and losses or revenue and gains. So within this capital account, C is equal to revenue plus gains, I'm using shorthand, minus expenses minus losses. In this case, it is this revenue, right? So this is the left-hand side, cash has gone up. And the right-hand side, capital, because of this revenue, what has happened? So this is also plus 60,000. 25,000. Again, the left hand side balances the right hand side because capital has gone up by 60,000 and asset has gone up by 60,000. How has capital gone up? Because you got revenue. Okay. Okay. Let's move to the next example now. Goods costing 80,000 was sold for 1,25,000 on credit. This time, similar transaction to number 6, but what has happened in this case? It is on credit. So which means you've sold some products and you'll get the money later on. Okay, fine. So let's check. So one account will be the sales account because you've sold. Okay, and one is the debtors account. The person, what is the meaning of a debtor? A person who has to make payment to you, right? So what will happen is this will be debtors account debit to the sales account by how much? 1,25,000. This is also 1,25,000. Correct? This will be the journal entry. Now this debtor is an asset because you have to get money at a later point for something which you have already done. You've already given the goods to the purchaser. He has to pay money to you. So this is an asset. Okay, you're expecting future economic benefits to flow into the business. So the asset has gone up. And what has happened to this? What is sales? Sales is a revenue, like we discussed in the last example. This has also gone up. So let's check the accounting equation. Asset is equals to liability plus capital. In this case, on the asset side, what happens? The debtors account has gone up by plus 1,25,000, and the revenue is a part of this, like we discussed in the last example, that has gone up by 1,25,000. So again, both of these balance. The left hand side is equal to the right hand side. Assets plus 1,25,000, capital plus 1,25,000. Okay, let's get to the next example now. Check issued to the supplier of goods worth rupees 35,000. So a check has been issued. The moment a check is issued, you know one of the accounts which will be involved will be the bank account to the supplier. So supplier is someone who is a creditor. Creditor means someone who had to get money from you, right? Now you have made the payment. Okay. So which will be the accounts which are involved? So one is, so money has gone out from the bank account, and this liability which you earlier had has gone down. So a liability has reduced because you have made a payment to someone to whom you had to make a payment. There was a payment of 35,000 to be made, and that was a liability earlier for you. Now you have made that payment. So which means a liability which you had has reduced by 35,000. Correct? The liability has decreased by 35,000. Okay. What is the journal entry first for this? So will be, so whoever is the creditor, because it is not mentioned. So creditor account debit to bank account, because I'll tell you. Okay, this is 35,000. This is also 35,000. Correct? This is the journal entry for this. So because what has happened is creditor is what? It's a liability. And what has happened to the liability? The liability has decreased. When a liability decreases, what do? Check here. We have to check here. Liability has decreased. Correct? So we have to debit it. That is what we have done, right? In the journal, we have debited this account. And to bank. Bank is what? Bank is an asset. And what has happened to the bank balance? It's gone down, right? So asset, when it decreases, again has to be credited. Correct? Asset when it decreases has to be credited. Correct? Okay. Fine. Now let's check the accounting equation, which is asset is equal to liability plus capital. Fine. Now on the asset side, what has happened? This bank balance has gone down by 35,000, right? Bank has decreased. On the liabilities, on the other side, on the right hand side, what has happened? The liability has also decreased by how much? This creditors account what has happened? Because you have made a payment to him, your liability, your business's liability has reduced by how much? 35,000. So again, the right hand side is equal to the left hand side. Okay. Fine. Okay, let's get to the next example. Fine. Now check received from customer amounting to 75,000. Check received. So which is the account which will be involved? Bank account. Correct. Received from customer. So earlier you had sold some stuff. Now you got the payment from that customer. The customer was a debtor earlier, right? You don't know the name. It's not required. 75,000. What will be the journal entry? Let's quickly check. So money has come in, right? So the bank account has to be debited to the debtor's account. What is the amount? 75,000. Correct? This will be the journal entry for this transaction. Bank account is an asset. When an asset increases, it has to be debited. Debtor is also an asset, but because now you've already got the payment from him, so the outstanding balance for the other person, which he used to owe to you, has gone down. Suppose earlier he had to give you 1 lakh rupees. Now he has paid 75,000. So his liability to you has decreased. For you, it was an asset. So this asset has decreased because now if he had to pay you 1 lakh earlier, now he only has to pay 25,000 because he's already paid you 75,000. Okay, now let's check the equation. Asset is equals to liability plus capital, and both the account are assets. So we'll just have to check this side of the equation. One, the bank balance has gone up by 75,000 and the debtor's account has gone down by 75,000. So the left hand side effectively does not move. Plus 75 minus 75 is 0, and these two are not affected. So again, 0 on this side, 0 on this side. Okay, now the last transaction. Okay, what is the last transaction? Withdrawn by owner for personal use. See, withdrawn by owner. What is withdrawn? Money. Okay, what must have gone out? It might have gone out from the bank account or from the cash account. We don't know. It's not mentioned here. But let us check. Let's assume that the owner has taken out money, let's say, from the bank account. Okay, so what has happened? So the owner, when he puts in money, yeah. So when the capital comes into the business, what is the rule? Check. We'll have to check here now. The capital, when it comes into the business, it has to be credited. But now what has happened? He's withdrawing the money, right? The owner is withdrawing money. So it has to be debited because it will decrease the capital, right? So he's taking out the money. So debit. Okay, let's check. So it has to be bank account and the capital account are the two accounts involved because we're talking about the owner. So the capital account has to be involved. Okay, capital account. These are the two accounts involved. Let's check the journal entry. So capital account, when money goes out from the capital account, it has to be debited. Right? We checked just now. Here, it has to be debited. And what happens to the bank account? The bank balance will decrease, right? To bank. Why will it decrease? Because the owner has taken out money from there. How much? 25,000. Fine. Now let us check. Okay. So bank is an asset. It has decreased. So we have credited. This is a part of capital and it is reduced. So we have debited. Okay. Let's check the accounting equation, how it balances in this case. Assets is equal to liability plus capital. Asset, what has happened? Has gone down, right, by 25,000. How? In terms of the bank balance. And capital, what has happened? Has also gone down because the owner's stake in the business. If the owner earlier had to get, he had already put in some 10 lakhs and had made some profits in the business. Out of that, he has taken out 25,000. So capital has reduced by 25,000. So this is from the capital account or the drawings account. The withdrawals, when an owner makes withdrawals, it's called as a drawings account. So this is basically what might have happened. Okay. So again, this is equal to this.